Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Tuesday. We're at the 24th of June, 2025, about 6:50 p.m. Central Time. And you know, last night I was sitting there going, how do you trade these markets? If you think back since Saturday with the bombing by the U.S. of Iran, and all of a sudden we're declaring victory. I don't think it's a victory yet. I think I'm out there by myself on this, and that bothers me. Where's the proof that the bombs we dropped at Fordo did the job? Number two, where's the uranium, the 900 pounds of uranium? So if you're telling me we didn't take those out, if you're telling me the Iranians still have 900 pounds of 60% weapon grade material, which can be converted very quickly into nuclear weapons, they still have their ballistic missiles. Yes, we took out, not we, but Israel took out a lot of the launchers. I don't know what we have at this point in time. Now, that's not to say that's what the market thinks. The market roared today in stocks, ceasefire. That was a good thing. And it was wobbly. Both parties are still going at each other sporadically, but this is how these things begin. So I am looking for proof, and I realize I'm out there by myself, but I want to know that what we did actually worked. What if you find out, like a bad science fiction movie, you drop 14 of those mops, and underneath that, it's fully intact? And what if, and we know that they've moved uranium around, where is it? So I am not saying this might not get Iran to just say, we'll give you the 900 pounds, we're done with that, let's figure another way to make our country grow and do that. That could happen, but I'm not a Boy Scout, so I don't think that. I used to be a Boy Scout, by the way. All right. In the gold, you're up a little tonight. Silver's getting a little bit in copper. Keep your eye on copper. I keep saying it in the metal market. There could be a squeeze play in London developing on the London Metal Exchange. Bonds and notes, they liked what they heard today. The Fed chair was there speaking at the House on Capitol Hill and basically saying, if it warrants, we'll cut. You now have 3 Fed members that want the possibility, if the data's saying it, we're going to get more data between now and the next Fed meeting in July, a lot more data for the Fed to make a decision. But the key was the Fed chair didn't put his feet in the ground and go, we are not cutting until later in the year when I see more. He opened the door that he's got an open mind if that's what the market warranted. He did not join the doves, and he didn't join the hawks. What he basically did said he has an open mind. The marketplace in the energies collapsed over 2 days, and they've done their job. Now the market starts looking beyond. Now here's what you have to start putting into your head. A number of currencies, especially central banks of the big currencies, have cut interest rates. Forget Japan. It's got to raise rates because it's been keeping its currency down so long for decades. So a different game there. But when you go to the rest, they have been cutting rates to spur on economies. We in the U.S. have kept our rates high. The moment we start cutting our rates, it's because the economy, the Fed perceives the economy is starting to tip somewhere, be it the inflation is getting much lower and they're fine there. It's going to have to be labor. That's what I think. So if labor starts tipping, then they want to get ahead of the curve, and I think that's what you heard from 3 Fed members so far. That takes time. So as the other economies might be coming up with growth, we'd be fighting the other part. The other thing people aren't paying attention to is very shortly, could be any day this week, the president's got to tell you what's going to happen with tariffs. One country, one, is a deal with the United States. You did hear that Europe wants to penalize Boeing. That's an easy shot. They have Airbus. So they'll go, we don't need your Boeing products. They're getting rough. And the reason they're getting rough, and they will be rough, is you got to have 27 countries come in and agree to something, and that's like next to impossible. You don't have one voice speaking for all 27. You have 20 voices either saying yes or no, and they can really screw things up. President knew that. That's why he said Europe would be the last that we deal with. But what about all the others? Where are we with Mexico? Where are we with Canada? Where are we with India? I know as much as you do. You probably know more than I do on it. But I want to see where we're at. Because as much as this market's going up, those tariffs can all of a sudden jolt the world economies. And this president has already proven he does what he says. If you don't believe that, call the Iranians. Every other president threatened them to bomb them. This one did it. So, little different game going on. But I tell you, this one can go in there again if he smells that he really got nothing accomplished. Got to be careful with that. All right. What about data coming out? So let's take a look. In the morning, you're going to get the Mortgage Bankers Association. We're seeing one consistent thing. Housing prices you saw today in Case-Shiller, they're really not backing off. They're not rallying as much as they did, but they're rallying still. Number two, mortgages. The rates are staying high. They're not near 5%. They're closer to 6.5%, 7%. And that makes the high price of a house, the high price of a mortgage, a lot of people can't afford it. Even the Fed was asked about it, and they said that isn't our job. And the Fed chair is right. That is not their job. Inflation and labor is what the Fed is there to do, and the rest of it's the U.S. Treasury and the government. That's the reality of the situation. So, still a weak market there. New home sales data. Well, it is summer, so you could always get an upside surprise. Don't you kid yourself on that. People that are moving out of one home into another, they can afford to do certain things. They can pay down more than they did. Fed Chair Powell, day two on Capitol Hill, but I don't think he's going to say anything he didn't say today. And petroleum stocks, a decline in the oil stocks, and sort of a wash in the gasoline and the diesel. And we'll get tomorrow the EIA number as well. So that is where I think you're at and what you got to think about. When we take a look at what the S&P has done, knock, knock, knocking on the door, heaven's door, isn't that a song? 61, 62.5 was the highest weekly close on the futures. As we're coming up here, you're still far away. You're 140 points away on the S&P from the high, but you could get there, all right? This is still a market that's trying to come up, but I'm not saying we're trending. I'm saying it's a whipsaw market. As you were up, you fell apart. As we got good news out of Iran in 48 hours, you shot all the way back up. That's not a trend. The market came down, and again, it held the 200-day average, and if you think about it, most of the time, the 18-day average of closes. Where's the resistance? As far as I'm concerned, you're right at it. It's right here at the upper Bollinger Band. This market doesn't like to go through those bands. It likes to consolidate in them before it punches through. Doesn't mean it has to, but void of a trend at the upper Bollinger Band and overbought. I'll let you buy it over that band. Not me, not my clients. In the NASDAQ, making your move for the high here. You've got contracts coming up here at 22,870, 400 points away. That's the most recent high when you take a look on the September contract. And identical, overbought into the upper Bollinger Band. Dow, overbought into the upper band. So I realize people are going to say you got to jump on the bandwagon. The train's left the station. I will say that the market only stays over a Bollinger Band 5% of the time. And no, that is not a reason to go short. You heard what I said. But if one played this long side, it is absolutely an area to take some money off the table. In the Russell, not quite there, as usual. It's still the laggard. At the Bollinger Band, I think the pros will take some money off the table. We then come to the DAX, and in the DAX, I think you bottomed out. I said this yesterday. Look at yesterday's video. I said, wouldn't surprise me if you're trying to bottom out right here. And bingo, I didn't expect this today. Right back up and over the 18-day average of closes. So this leg of the down, finished, complete, over. Now the question is it going to set up a trend to trade? Because it's been a highway, if you will, all the way down, and now it did a U-turn on you coming back up in momentum. In the bond and the notes, well, you're up to key resistance, the 100-day average and the upper Bollinger Band. The market is banking, and I don't blame it. Just hearing 3 Fed members come out is a big change in rapid order that they're open. I didn't say that they said we should go with a July rate cut, but they're open to one. We haven't heard that in a very long time. So that's different. The 5-year note's the same, overbought up here. Now, here's what bothers me in this market. Positive bother, by the way, not a negative. This is long enough in a sideways action to get a breakout one way or the other. You've done your job. If I come back to this chart, you've done your job. You've been sideways for a long time. Markets tend to try to figure out how they can break out of those. So I certainly wouldn't be fighting it. If you embed, you'll have your answer, I think. When we look at the dollar index, how fast the market lost everything. Yesterday, you opened up on Sunday night, war, what is it good for, right? 79.01, 90, let me get this right, 99.01 and a half, all the way down to 97.30, almost a 200-point break. Dramatic, to say the least, and sort of caught still in where you've been in the Bollinger Bands. You haven't broken out of this yet. In the eurocurrency, last night I thought you can get up to that band and create the issue. You're right there. So, got to prove that the markets can go from here. You don't have a trend, you have a higher high and a lower low, and you're overbought. In the British pound, you've gone from the upper Bollinger Band to the lower band. Go look at our videos here. I said, I don't know. Market's now got its support. Did I expect it to rally back to the upper Bollinger Band this fast? No. I mean, I wish I would have known that. I'd be retired, okay? That's not what I looked, but I certainly said I don't think the pros are short anymore. I didn't expect it to go right back to the upper Bollinger Band. I mean, this is radical move, and they're big ones. They're not small. These are moving big numbers at a time, $2,000 swings in the futures market on one contract. I think Bitcoin, I said this the other day to you, yesterday. I said I wouldn't be surprised if we're now bottomed out in here. I don't have a signal to be a buyer, but I have plenty of signals not to be short anymore. That's the important thing. In the crude, come on, 81.40 down to 66.81 in 48 hours. I mean, look at the size of that break to anything else on this chart. And that's in two sessions. Wow. So, again, if you bought over the Bollinger Band, how did you fare? Tell me, how'd you do? I don't think you did well. And again, you'll say, well, I could have sold it over it. Really? At what point here would you be going, uncle, I give up, I give up? It's not the way that I teach charting, and that's what we'll talk about right after this. How do you learn these techniques? Because I have it in one course that you get a really good set of basics from. Up to the upper band, right back into major support. This is where the market has to, I think, consolidate now and say, what is it going to be when it grows up? Bear, bull. If you were to ask me, I think overall bearish. Because if things can stay the way that they should in the Mideast and Israel and Iran aren't going at each other, and if we can find that uranium, and if the damage was done to the centrifuges, you don't have to do too much. Then it's a question of what's going to happen. And I think with the Saudis and other OPEC members wanting to plow out what they can, that's it. In addition, in crude, did you see the president's post on Truth Social? He has no problem now with China buying the Iranian oil. I had a problem with that. Why are we sanctioning then all the teapots, and that's what they're called, these independent refineries in China, for buying the Iranian oil? I didn't understand the post at all. I think his jubilance got to be reined in a little bit. He shouldn't be saying you can now buy that. We still have the sanctions, or will we? Maybe that was behind the scene, the deal that's going to happen. The sanctions will come off and the Iranians will give up the uranium that we think they stored somewhere. I don't know. I have no idea. In the gasoline market, right in time for July 4th. Well, I'll be a son of a gun. You just went from 239 to 206. I mean, this is the stuff that's wild, all right? And that's 15% break on it. Now, that doesn't translate to the gas pump yet, but just to give you an idea of what was going on, these things take time, these fluctuations, they don't go into play the very next day, all right? They get smoothed out and so on. But the president got what he wanted. He's getting the headline numbers on this. And in the natural gas, this hot weather, it's 100 degrees without heat index in New York, and yet the market's not up. I'm going to repeat. It's a futures market. That's what I was trying to explain. So now the market goes back to normal summer trade. The first big heat wave is done. It did, and I agree, it did in part with Iran and Israel create this monster spike, got to 423, and then dropped 60 cents. I mean, by any stretch of the imagination, that's a monster drop that happened. Let the markets rebuild. Everybody wants to be in them to catch whatever. If you think these are trending, great. I'm not convinced that that's what you have at all in the market. What I know how to get you into a trend with is what I teach you. Swing lines, moving averages, slow stochastics, Bollinger Bands, and how to work with my version of window envelopes. It's all done in my courses. So if you go to our website, iraepstein.com, and you go to the word courses, it's all there for you to learn with, all right? You can even, you'll see cursors up here that, well, not cursors, icons that you can give a click. Go there, take a look, teach yourself. I'm Ira. You have a good day.